Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for June 4th, 2023. Can you believe we are headed into summer? We're going to see if that sell in May, go away comes true probably after this week. We are closing at the highs of the year as of Friday, so in the S&P. So big breakout in stocks. Can it sustain? We're going to talk about that and more, and talk about what's happening this next week. So make sure you don't go anywhere. We're going to take a look at currencies. We're going to take a look at crude. We're going to take a look at the stock market indices. And we're going to take a look at a lot of different currencies and setups. So make sure you all stick around. But make sure you also check out Forex Analytics. It's only $1 for 10 days. So you can check it out, try it out. Make sure you download the mobile app when you do that as well. And jump in our chat rooms. I'll show you a little bit later how active our chat rooms are. All right, let's go ahead and get into the markets. And let me get rid of myself here. And let's jump over to Forex Analytics, the platform. Now, you know that you can get all of your analysis right here as well. You have macro to Elliott wave, candlestick, basic, technical, harmonic analysis on 30 different instruments. And all that's consistent or constantly, updated throughout the course of the week. So make sure you check all of that out when you log into Forex Analytics. But we're going to actually take a look at some of the charts, and I'm going to go ahead and put this into kind of a full screen mode for you. And we're going to talk about, like I said, we're going to talk about the S&P. We're going to talk about different markets. But I first and foremost, want to talk about this breakout in the S&P. Now, you'll notice that we closed, like I said, at the highest levels of, the year. You can see the beginning of the year, 2023, started right around here, and you can see where we're at right now. And we closed in breakout territory. The question that we have, after we talked about the breakout, and you can see that arrow from last week, was how far can we go? We're reaching for the 618 retracement of the highs from last year in 22, to the lows that we put in at the bottom of 2022. We're at the 618 retracement, or very close to it. You can see it's right here. Also, you'll notice that there's horizontal resistance that comes in at this area as well. You can see right here, big horizontal resistance. You know what? I'm going to actually do something else here to make it a little bit easier to see. So you can see the highs right there. We're coming right into that 43. It's 43.20 on the charts that I'm looking at on the CFD. But you can also see we are reaching for the 127% extension of this high to this low. So when you see all of that, we call it confluence of resistance coming up here between 127% extension, 618 horizontal resistance, the question that we have is, can it sustain? If you look at relative strength, just taking a real quick look at RSI, you'll notice that the RSI is actually breaking out, and we're not anywhere close to being overbought just yet. So that means that the S&P, if it wants, it can extend further. One of the big issues I have right now with equities, though, is that you got volatility, the VIX, sentiment in the VIX is extreme bearish. And then if you take a look at some of the indexes, we're getting kind of lofty as far as bullish sentiment goes. It's almost at extremes. So, and it depends on what market you're looking at, but because volatility is at extreme bearish sentiment, that's a bit of a risk for the market. Because if you look at the VIX, and let's just pull it up really quick, just so you can see, we've come down to pretty key support. I mean, levels we haven't seen since 2021. And when you have that complacency and volatility, the risk is that we might get a bounce here from these levels. If we start to see a bounce, that a tick up in volatility tends to coincide with a sell-off in equities. So just be very careful. And it doesn't and wouldn't surprise me in the least bit to see us break out, volatility starts to increase, we fail. Remember, we just got past a lot of big news this week. The news being the debt ceiling was raised, and we just got past non-farm payroll. So there's a lot of reasons for the market to be excited and to be bullish. However, the market tends to impose as much pain as possible, and if you've got the whole market chasing higher at new highs in the year, you got the FOMO action happening. You've got everybody's just trying to buy stocks and say, well, it's going higher, so we got to cover our shorts, get long. and then to see it reverse potentially next week wouldn't surprise me in the least bit, especially with the range bound themes that we've been seeing in a lot of different currencies and a lot of different markets throughout all of 2023 thus far. Anyway, we're going to continue on, and I'm actually going to start off with like some of the calendar events that we're dealing with this week. We're going to be dealing with crude and OPEC on Sunday. So Sunday night, OPEC's going to be, they're meeting. They're going to talk about having some, potential output cuts, obviously, because, where the price of crude is. And you'll notice that crude is approaching some really critical support. If you go all the way back here to, 2021, you can see all these spikes down below, close to the $60 level is held in the past. And so therefore, crude's bounced back. If we get above this 50 DMA, I think that's going to be a pretty bullish event for crude. And one of the reasons why I'm factoring this into what I'm doing in currencies is because it could really influence what I do with the dollar Canadian this week. So let me just mention really quick that we have the Bank of Canada on Wednesday. So on Wednesday, we have the BOC. We also have Canadian employment at the end of the week. So, and there's some, I think IV PMIs coming out at some point this week as well. Yeah, that's actually Tuesday morning. So just keep in mind that could very much influence not only the Canadian dollar, but, with what's happening in crude. Now, crude, going back to the crude oil charts, I just want to say that above the 50 DMA, this would actually turn, in my opinion, it would turn pretty bullish if crude oil, broke above these levels. That comes in around $75. So if we start getting above $75, we'd be breaking this wedge, and that'd be bullish. Obviously, we're going to be faced with a lot of resistance between this trend line that you see here and then also the 50 DMA. So there's a lot of work to do for crude, but if crude rallies, it could greatly influence not only the dollar Canadian, but I'm going to actually take you over to the Canadian yen, as we have, again, the Bank of Canada this week. We have crude oil that's going to influence the markets. We got Canadian employment on Friday. We've got the IV PMI that comes in on Tuesday. So you'll see this Canadian yen running right into resistance. Now, this is big resistance, previous support, obviously current resistance, also the 618 retracement. So that, and you can see we basically closed at the top of a wedge. So if you're a Canadian dollar bear, these are levels that you might want to start considering looking for Canadian yen shorts. And you might not even be just a Canadian bear. You might be a yen bull because you believe the Bank of Japan is going to turn the corner at some point with monetary policy and look to adjust yield curve control and maybe moderate monetary policy. And then if that's the case, the Canadian yen might be a good short up here for you. But for those of you that are looking for Canadian dollar Canadian, let me get rid of all that. If you're looking for Canadian weakness, or strength, then you'll notice that we had this pretty big failure up here this week. And because of that failure and that big impulsive move lower, the risk is that the dollar Canadian could actually break lower towards support, towards this major support that comes in around 133.50. Another big issue with the dollar Canadian this week, when you're talking about just the CAD in general, is obviously the Bank of Canada. Even though the Bank of Canada is expected to keep rates unchanged, there is a risk that they may raise rates, or at least have a hawkish, a hawkish press conference, or sound more hawkish to, suggest that they may be raising rates again, and here in the next meeting or two. So with that being said, watch the Canadian. I think there's going to be a lot of volatility this week as well. Now, speaking of other things that are happening on the calendar, on Monday morning, early Monday morning, well, it's actually, you'll see the Swiss CPI data. It's Sunday night, but it's early Monday morning in Europe. And the reason why I wanted to bring this up is the dollar Swiss actually held really key support on this dip this week. And you'll notice that this breakdown point in the dollar Swiss was at 90.60. We basically rallied past it and we closed above it. Now, if you zoom in a little bit on the intraday charts, when you're talking about the Swissy, you'll notice that we're following an ascending channel. Let me just draw that out for you really quick. We have a nice ascending channel that's very, very, it seems like to me, it's being very well respected. So as a result of this, you know, this ascending channel, while we're above 90.30, you got to imagine that there's going to be some upside pressure. Now, globally, you know, considering we're talking about CPI and we're talking about inflation, globally, we've been seeing disinflationary pressures build, you know, not only in the U.S., but, you know, in certain parts of Europe, China, everywhere else. If that is the case in Switzerland and we see, you know, the CPI come in a little weaker than expected, that could be the catalyst that drives the dollar Swiss up towards 92 cents, you know, up towards this resistance or the channel resistance over the course of this next week. Keep that in mind, because I think a lot of people have been playing the dollar to the short side, trying to pick a top in the dollar. But I think there's some more upside in the dollar. Now, the dollar is not going to be the main focus this week. Keep that in mind, because there's not a lot of U.S. data. We are getting the ISM Services PMI on Monday morning, and that's, you know, aside from unemployment claims, I mean, there's, you know, and we're in a blackout period with the Fed. There's not a whole lot to hang our hat on as far as the dollar goes. But if you look at the dollar index, and I'm just going to take you over to the daily chart, I still think that the 200-day moving average is a realistic target. Now, if you look at it from, you know, just how the dollar has been acting, I would venture to guess that we're developing some sort of flag pattern. That would be a bullish consolidation before our next move higher. So watch the dollar index, because if we do break the 78% retracement, which comes in at 104.40, the next likely target is the 200-day moving average. And if this is truly a flag, we could go a lot farther than that in the weeks ahead. And like I said, I think a lot of people have been trying to sell this dollar strength this week. And we're seeing it. You know, we saw a bit of a reversal in the sterling. We saw a bit of a reversal in the Aussie, and obviously the dollar CAD, and even in the dollar yen. But keep in mind, guys, the dollar index still looks pretty bullish at this point. You know, pullbacks are shallow, and they're being bought. So that's something that we should all be paying very close attention to. Now, Tuesday night, which is actually Wednesday morning, we're going to have Australian GDP. Now, this Aussie dollar chart is the data feed is not correct, and I'm going to show you why. If you look at the intraday charts, the Aussie started to pull back, you know, towards 66 cents by the end of the day on Friday. The daily candle does not actually look like that. This is Forex.com data feed. I'm assuming it's going to revert. It's going to fix itself come Sunday. I've noticed it actually on the Aussie on this chart. That's why I'm not going to look at the daily chart here. But I also noticed it on another currency pair as well. Oh, the dollar MEX. We didn't close at these lows. We actually rallied back to 1750 by the end of the day. You can see it on the intraday charts. I'll talk about the Mexican peso a little bit later as well. But when you're talking going back to the Aussie, excuse me, I'm gonna stick with the Aussie just because we do have Australian RBA decision. Actually, it's gonna be Tuesday morning, and then on Wednesday morning in Australia we have GDP data. So the RBA is expected to keep rates unchanged, but a lot of people are thinking that the RBA may have a hawkish tone for the RBA meeting. So keep that in mind, because the Aussie has recovered quite nicely. I would venture to even say that we did a little bit of a false breakdown last week, and closing back above 65.60. That is, in false breakdown territory. But like I was just showing you about the dollar index looks constructive for bulls. That would weigh on the Aussie dollar. And one of the other things that I need to mention about the Aussie as well is, if you've traded Australian dollars for any period of time, it is very closely tied to risk and risk appetite. And so, yes, stocks are breaking out right now to the upside. But as I said a little bit earlier, I'm a little skeptical as far as if we're going to get further upside in equities. But you can see, because here's the S&P here, because we broke out higher, it's dragging the Aussie. If the S&P should reverse by the end of next week and we end up, dropping back below 4,200, the Aussie is going to get taken down with it. And, what I'll be looking for in the, weeks and months ahead, and probably the remainder of 2023, is I do expect stocks to eventually start to come down, especially once we get into more of a recessionary type of environment on the second half of this year. And if you start to see the S&P reflect that, my assumption is the Aussie is going to reflect that as well. However, what I'll be looking for is to see if there's any divergence in those types of moves, in that correlation, should that end up being the case at the second half of the year. Anyway, I just wanted to mention that the RBA is meeting this week. We do have Australian GDP that could obviously move the market. And let's continue on with other things that are happening this week. So we talked about the Bank of Canada, which is going to be Wednesday. And on Thursday, I want to take you over to the dollar Mexican peso really quick, because we do have Mexican inflation Thursday morning. So with that being said, what you'll see here in the US dollar Mexican peso is we're holding these lows. Now, we managed to hold these lows, which you'll see that relative strength is divergent as well. And I'm going to delete this trend line here. Let me get rid of that one too. But we really need to get back above 18, which would be right here. We have to get back above 18 to change course of the dollar Mexican peso. We've been stuck in a strong descending channel for quite some time. And in order for us to rally and get, back above the 50 DMA, you can see it's right at 18 or 1790, to even, try to make it back towards the 200-day moving average, we have to really get a daily close above 18. But since we're dealing with inflation data out of Mexico on Thursday, maybe that's a catalyst that could drive the dollar Mexican peso higher, especially if Mexican inflation comes in below expectations. Now, speaking of inflation, again, there's a lot of actually inflation data happening this week. You should take a look at the US dollar Norwegian krona, and I don't know why it's not up here, and I must have accidentally deleted it, but that's okay. We are going to draw it out right now. If you look at the US dollar Norwegian krona, we've actually rallied quite substantially to the 78% retracement of this. That was the post-COVID lockdown move. We're at the 78% retracement. I mean, that's a very bullish move. You can see how, as we broke out above 11, relative strength was divergent. So it makes sense that we're stopping, but the flip side is thinking about OPEC at the beginning of the week. What happens if OPEC doesn't announce further cuts? And crude does come under pressure. Maybe that's a catalyst that drives the US dollar Norwegian krona higher. Also, inflation data on early Friday morning, which would be late Thursday night if you're in North America, that could also be a catalyst as well that can drive the US dollar Norwegian krona. And then also, one of the strong relationships in the market is between, stocks, what's happening with equities, and the US dollar Norwegian krona. Also keep in mind that the Norwegian Central Bank has very large holdings of global equities as well. So that could influence what happens with the NOK. All right, now I want to talk a little bit about what's happening in equities, and I'm going to take you over to what's happening in the S&P and what's happening in the NASDAQ, and actually the other markets too that are being dragged higher. But before I do that, I want to mention that if you haven't had an opportunity yet to check out the Trader Funding Program, make sure you do so, because if you want to learn how to trade our money, and so you don't have to risk your own money, go to forexanalytics.com, hit the Trader Funding Program link, watch this video, tell you about the TFP program. We've also laxed our rules. So what that means is, instead of giving you a maximum risk, trailing risk of 5%, because you just have to make 10% and not lose more than 5%, we've actually laxed that to 6%. So, and you can't have more than a 5% intraday drawdown. You know, if that happens, then you can't pass an assessment. But if you pass the assessment, then you can access our capital and you can keep 75 or up to 90% of the returns and take none of the risk. So if you want to learn more about it, make sure you watch the video. Down below in the link to this video, there's a video of how I passed the assessment. Watch that video. I did it when the rules were not laxed, when they were harder, and I managed to do it. So you can do it too. I know you all can do it. All you have to do is select what account you want to try to access, whether it's a $25,000 account all the way up to $1 million account. Each assessment is going to cost different based on the assessment that you're taking. Make sure you check it out. And one of the big benefits of being in the trader funding program is you automatically get inclusion into our community. So not only will you be, seeing what I'm looking at, what I'm trading, you'll see it in the trades room. You'll know what other traders are doing and what other traders are thinking about and what other traders are talking about as well. It's probably one of the most active communities in the currency market, or in any market for that matter. So you will have inclusion in that with the trader funding program, because we want you to succeed. We want to be able to split profits with you. I'd rather that you only keep 75% of the returns, but you can make that choice. So make sure you check out the trader funding program. Now let's get back into what's happening with equities. So you have the S&P that's breaking out, right? Yeah, we're breaking out. As I mentioned to you before, 4,300, 4,320 seems like a pretty logical target. Can we go higher? Absolutely, we can go higher. What you're seeing is a turn higher. Well, obviously the NASDAQ has broken out. The NASDAQ100, we're above the 618 retracement. Pretty overbought here, but we were looking for a breakout higher, and that's what we got. And we were talking about maybe channel resistance up here. You'll notice that the Dow has bounced, and the Dow actually managed to rally significantly off the 200-day moving average. If you look at the Russell 2000, the most, the weakest of the indexes has managed to bounce and break above the 200-day moving average by the end of the day on Friday. Now everything looks looks great and all, but the one thing that the market is starting to lose, its leadership of the major tech stocks. You see the NASDAQ100. This is how the NASDAQ100 is moving towards the S&P. It just shows you the NASDAQ100 has outpaced the S&P quite aggressively. Well, really, since the beginning of this year, since January of this year, you can see what's happening with tech stocks over the S&P. That does worry me just a bit, because when you see, when you see tech stocks outpace just the broad market, and we all know it's no secret that there are just really a few major tech companies that are really driving this whole market higher. If that shifts, that could suggest that leadership is trying to change. Doesn't mean that you're going to get an all-out reversal in the markets, but you're going to start to see rotation. That means that those stocks that have been driving the market higher, if they start pushing lower, they could really end up driving the broad market lower, should you see a reversal start to really take place here in these NASDAQ stocks versus the S&P. So it's something that I think everybody should be keeping an eye on. Now, I know you probably follow what's happening in the bond market, and we can take a look at what's happening in the 10-year. You can see what's happening in bonds. You probably follow what's happening in currencies, but make sure you watch that ratio of what the NASDAQ's doing versus the S&P, and you can do this ratio up against like the Dow or even the Russell 2000 or something like that as well. So those are other things that I would be keeping an eye on. Now, the last thing I want to mention and I want to talk about. And remember, you can access all this information on forexanalytics.com. There's a lot of different tools inside this platform, so make sure you all check it out. But I really want to talk about gold. And the thing about gold is we are starting to come off, and we're approaching really key support. Like I said a little bit earlier, I think a lot of people have been trying to sell dollars. And what we're seeing potentially a bull flag develop. But what's got my attention really is what's happening in the gold markets. Because gold, not only are we back below this breakout point, but if you actually zoom in here, and I'm gonna take you to a different number it is right here at 1930, 1935, you know, and you know, we do this analysis with the Forex analytics community privately. Every single day we develop this what we call a bias chart. You'll notice on support I have it written down at 1930 right here. That's going to be really critical support, because if that starts to break, it's this blue line right here, then you're going to start to see a sell-off in gold, which tends to be the beneficiary here is the dollar. The dollar and the gold relationship is an inverse one, and it's very strong. So if you start to see gold break down, I would automatically think that the dollar is starting to firm up. Now, there's a few other things that that are happening this week. We do have some China data. We have Chinese CPI Friday morning. It's Thursday night if you live in North America, and what else we have this week? That's pretty much it. But I do want to talk a little bit about the yen, because the dollar yen, I've been playing it actually on both sides. But you'll notice here that we are holding the 138 level, and the 138 level is a major breakout point. And I think while we're above here, we can still reach for 142, which has been ultimately the target that I've been looking for in the dollar yen. However, if the dollar yen starts to reverse and we get some news that, you know, comes out of maybe you hear the Ministry of Finance or the Bank of Japan, you know, get a little bit vocal about yen weakness or about what they're going to do with monetary policy, then you got to be watching the 138 level. If we start breaking back below that 138 level, then automatically you should be looking at what's happening in the euro yen, pound yen, the sterling yen or guppy. It's in breakout territory. The euro yen, not so much. Aussie yen's up against major resistance. Kiwi yen just kind of floundering around because the Kiwi's been a little weak. And you saw the Canadian yen, as I mentioned a little bit earlier, it's right up against major resistance, wedge resistance, you know, and some pretty key fib levels. So again, if the dollar yen slips below, whoops, sorry, I didn't mean to hit the microphone. If the dollar yen slips below that 138 level, that should get your attention. Pretty much you'll see what's happening in gold, yields, and everything else is probably moving at the same time. So with that being said, I want to thank you all for spending your time with me. If you feel that these videos are helpful, make sure you give my team a big thumbs up. Subscribe to the channel down below so you don't miss any of these week ahead videos. We've been doing them every week for literally the last 7 years. So if you're enjoying them from myself and from the team, I'd appreciate your comments and your likes. That's always welcome. And make sure you check out our live shows. We have not only the flow show in European hours, we also have the face show in North American hours. That's where you're going to get my current analysis along with the rest of the Forex analytics team each and every trading day. So I will see you Monday morning on the face show. I hope you all have a great weekend, and I will see you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.